Good morning, everyone, and welcome to the European crossover webinar. And we've seen pretty big development with, obviously, as everybody knows, coordinated central bank intervention. But that was pretty much a dud. I mean, as we've seen S&Ps go limit down. We can just take a quick look at that. I don't want to spend too much time on that. But you can see here, look at a 1 minute chart, which is a 5 minute. There, it's just like quick and then right back down the bottom. And we won't open until 8:30 Central Standard Time unless there's a higher price. And you can see certainly that has not been the case. Look right here. Right there. And now we're just hovering at the bottom. We can go and take a quick look on crude. There's on a 30-minute. We're still hovering near these lows. Take a look at a 2-hour chart. I mean, when you look at what we've been most recently, then you would think it's a quiet session, but there has been some decent movement. I guess what, about $1.60 range, or a little bit towards the lower end, but and here with gold, we've seen the gold market going and come down. Now you can see here that we opened up in close around 1580, and then 1575, and we've been dropping here. We're at 1533. We actually got as low as appears to be about 1520. You can see here the NAS is same thing. There we go. You can see here we got as low as appears. We got as low as like about 1526. About 1525. Bounce back. Really, I mean, some decent moves, I guess you think, but it's, in this short amount of time from 1525, we rallied up to 1548, dipped down to 1538, rallied up to about 1550, and we're now down to 1532. With that, let's go on moving to FX. There hasn't been that much movement at all. New Zealand dollar fell on Monday after an emergency rate cut by the country's central bank, while the Australian counterpart slipped on market talk of a possible surprise policy review to combat the fallout from the coronavirus pandemic. Kiwi fell as low as 59.29, deepest since May 2009. Global markets have dislocated further with increasing signs of stress in some markets, sharply reduced liquidity and price action hinting at forced selling. Beyond just tightening of financial conditions, the risk is these moves worsen as the real economy already struggling with the onset of COVID-19. Against this backdrop, we think that risk is increasing for an unscheduled 25 basis point cut for the RBA. The RBA cut its rate this month by half a basis point to help the economy cope with the rising economic toll from the coronavirus that has hit travel, tourism, consumer and business confidence, and factory activity worldwide. On Monday, the RBA pumped extra liquidity into the banking system, part of a package of measures aimed at ensuring business and households have access to credit as coronavirus causes chaos in global financial markets. It's a race to the bottom, and the RBA will follow suit. Dollar down after the Fed rate cut, and the BOJ doesn't stop yen ascent. The dollar yen, the dollar fell against a broad range of currencies on Monday after the U.S. Federal Reserve made a surprise interest rate cut, pressuring the building on central banks to do something to restore calm to financial markets. Bank of Japan said at an emergency meeting it would buy more corporate bonds, commercial debt, and set up a new corporate lending scheme. Also, they made a notation here they're ready to even double up the purchases on ETFs. That just came across the wires about 10 minutes ago. The BOJ's measures will provide some help to corporate financing, but unless there's matching steps from government, banks will be reluctant to lend, said Ayako Seta, market strategist at Sumitomo Mitsui. Dollar fell to 106.70 yen. Greenback also fell to 23.38 British pound. Fed, Bank of Canada, European Central Bank, Bank of England, BOJ, Swiss National Bank all agreed to offer 3-month credit in the U.S. dollars on a regular basis at a cheaper rate than usual. The move was designed to bring down the price banks and companies pay to access U.S. dollars, which has surged in recent weeks as the coronavirus epidemic spooked investors. Fed has already signaled to cut interest rates 0.5 percentage point on March 3rd at an emergency meeting, the first emergency cut since the fiscal crisis in 2008. And lastly, here with gold, like I said, I'd rather just hurry up and get on to the analysis. Gold jumped in early trade on Monday after emergency rate cut. Prices rose initially due to the surprise Fed cut, said CMC market analyst Margaret Yan. Widespread pandemic causing global shutdown, emergency rate cuts, and falling U.S. dollars should be a nirvana for gold. So let's go and hurry and move into it. Well, we'll take a look at the events. And like I said, equities haven't even traded on these SPOOs and NAS for, what are we, 9 hours now or something like that, maybe 10 hours. So let's just hurry and move into FX and get the show on the road. Do have Italian consumer prices in the next 2 hours. Fed manufacturing, a lot of this stuff doesn't even make any difference. I mean, in light of everything that's happened, it really is of no importance. So let's go and quickly move into the analysis. So the euro finished the volatile week near the lows. 2 weeks prior, the bulls got worked on carry trades and unwound following this past week, with the risk of Italian banks weighing the pair down as Lagarde's misstep associated with it. Shorts are back in control and rallies back to 12.31 will be sold with further resistance at 12.85. Support for the potential tweezer bottom is at 10.50 followed by 10.04. So we did get that tweezer bottom, but of course, like I said, the rate cuts really threw everything into a different move. So, but we did come up in our resistances once again, as we know, to 12.31. Where do you have 12.31 here? And if we were to get that for the move here, then we had 12.85. So let's mark that here. And for now, we'll just go and mark this support here at 10.95. So the cable became unglued as stimulus measures were taken by both the BOE and the UK government. Obviously, everything's all brand new. Obviously, this analysis we're doing an Asian session, so we'll just deal with the levels we are at now. Cable's breach of 26 breach of the sell-off 2600 or 26 even set off a sell-off, an additional flurry of stops, um, leading the pair to support level of 2285, confluence with 2294, the 78%. Additional support comes in at 2204. So when we're looking here, we can see we've got a resistance level coming in right there, which is 2405. And 2285, well, right there, I mean, that's where they opened up and took off. And below there would be, let's see here, 2204. So, so the Aussie was hit this past week with a double whammy of global equity sell-off, along with the potential of further action for the RBA, which ultimately would weaken the risk on currency. The pairs hit multi-year lows, with 60 even being eyed by bears. Support comes in at 60.74. So. And you can see here we took off, and then we turned around and fell back. So we're basically all over the place. But let's go and take a look on a 2-hour chart for resistance. We'll go right there with resistance at 60.91. So the Kiwi finished the session at the lows, closing below 61 even at the as a rout of risk on assets continued. Support comes in at 59.95, and obviously with the RBA rate cut, once again everything's thrown out the window. But we do have resistance support at 59.95, followed by 58.54. Well, we're almost there, so 59. We just right there, see right there, we're just above it. So 59.95 followed by 58.54. So and I'll put that lower in case we make that leg down, you know where they're heading to. 58.54. And resistance. Right there for resistance. 60.90. Well, the dollar CAD paired back after nearly tagging 140. The pair closed at 38.05, forming a dark cloud cover on the daily. A rest is warranted after the strong run. Initial support comes in at 37.49. It looks like we just exceeded that 37.49, which is the 23% back, followed by 36.95. Resistance is going to be 38.74. Looks like we just got just a pair above that, but obviously with all the volatility, you can understand. You can see here they tagged just above that, and so the day's high is going to be 39.08. We'll go with that. And here's that 37.49, so we'll go with that for support. And you can see right there with the 23% of this entire move, and they just barely took that out. A little bit, maybe a little bit more than barely, but that's where we stand now. The dollar peso closed Friday with a hanging man, albeit not at the highs of the volatile week. The pair is likely fatigued, but whipsaw trading will continue with the resistance at 22.20, and you can see there looks like we got just a hair above 22.20, but we'll stay with that. Although this is likely to potentially move even higher, but 22.20. Was supported 21.54. You see, and that not too bad because the low was what 21.40, so 21.54 it is. Let's go move into the dollar yen. So the dollar yen fancied a dramatic about-face turnaround, leaving traders flummoxed. The week started out with a run to the yen for the tried and true safe haven play, which was then thwarted by the rise in U.S. yields, turning large gains into losses in a matter of minutes. The week's range was in excess of 700 pips. The resistance is now 850, followed by 896. Support is now 663. Well, you can see, look, we've already had quite the move because once again, it's everything thrown out the window with the rate cut. Also, I am seeing that the Fed's in there really pumping in a lot of liquidity as far as what we found out was that the middle of last week, the Treasury market froze. There was hardly any trading in it, just not picking up the paper. So I think potentially this opens the door that where the dollar yen could actually continue to weaken and make a run back eventually towards those lows. So resistance is going to be right there, 691. See right here, this close here, that right there, that's going to be your support, 561. But I think there's a potential for this to move lower going forward. The dollar index this week has been akin to a rocket launch as the index screamed from sub 95 to nearly 99. The bulls are back in control as the rush to dollars amid the equity sell-off has furthered by a turnaround in falling U.S. yields. Resistance at 99.11 was supported at 98.24, followed by the weekly pivot of 97.89. So you can see here the 97.89, they're falling back. They're actually just below that. So Let's take a look here. That'll be your support here, which is 97.38. There is some support here where we're at now, which is 97.69. So I'll tell you what, we'll go 97.69 slash 38. And resistance is going to be right there, 98.16. And with that, we'll go and move into the cross rates. So the Kiwi yen ended the week with a daily bullish engulfing candle. A short-term bottom appears to be in place with initial resistance at 66.39, followed by 67.20. A daily close below 63.43 would challenge 61 even. So support, you can see here, we're talking about 63.43. If we do break lower, and right there in this close is going to be the resistance, which is 65.43. And the euro yen did an about face to end the week, closing above key resistance level of 1974. The pair's open to challenge 2056 with additional resistance at 2094. The pair should find support on pullbacks to 1925. We're actually below that. Obviously, everything's been turned around with all these cuts, so we'll actually be looking a little bit lower. And you can see here this previous high. See that right there? And you would have seen how we eclipsed these days and would have opened the door for us to move higher. But we actually ended up pulling back. So support, you can see right here, this close and this open, that's going to be the support, which is going to be 1778. And resistance comes at that key level, which they closed above it on Friday, but 1970, right? Actually 1971. So the euro closed the week with a long-legged doji. The buyers are in control, but the risk for a pullback is increasing. Immediate resistance is 81.10. Well, yeah, but that being said, with the antipodium currencies continue to sell off, that's why we've seen this continued gain. How much further it's going to push? We're just going to go with the highs of the day. That's going to be the resistance, which is 82.56. And you know how Mondays are, so we could still end up staying close to these highs, and then later on we can see this market start to pare back. But you can see this bar on Friday really opened the door for that to potentially move lower. But obviously, with the rate cuts, things changed, and support is actually going to be the low for the day. We may not see that today, but tomorrow this could actually be a trigger for us to eventually to start to go and break lower. That support, actually, you know what? It'll be right actually where the market closed on Friday. That'll be the trigger, which would have us right there, 79.29. Okay, the Euro Kiwi closed the highs of the week, but formed a hanging man on the day's close. The pair has experienced a strong surge, and a well-deserved respite may be in the cards. Well, once again, like I said, same thing. The antipodium currencies and the RBNZ did go and do a surprise rate cut. So moving forward, it's going to be the day's highs right there, which is going to be 85.96. I think these moves can certainly maybe not reverse themselves, but they can certainly pair back. But it's not going to happen today. Probably tomorrow on Wednesday, we can see this pair potentially come back down here, which will be 80.49. Seems like a lot, and it is, but I'm just saying is, we'll see the market start to quiet a bit, and then maybe by Wednesday we'll start to push a little bit lower. But in the meantime, support is going to be right there at the low, which is going to be 81.52. Actually, that's too low. Hold on, let's take a look on the shorter time frame. $83.83. Okay, the Aussie yen finished the week off the lows, and although managed to defend 65 while closing above 66.50, immediate support comes out, resistance comes in at 68.04. Support is going to be 65 even, with a closing break below targeting 64.20 or 62.40. So it's going to be 65 even. And as far as resistance, it's going to be right there, 66.50. And the thing that makes it difficult, like I said, is not only have we gone through excessive volatility, but then to do the surprise cuts across the board, really throwing everything into, you're really going to have to look at the levels, because the levels are the only thing that can save you as far as your risk, and that's all that we can go with. So, we get ready to do this, and then obviously the surprise rate cut, and then everything's kind of been thrown upside down, and we see where the market can potentially move to, and then you look at these levels to go in and measure your risk, and that's all that we can go and do right now. I mean, to go in and say, okay, now we think it's going to go here, it's going to go there. Really, you can just go with the technicals in a sense, because right now with the moves that we've seen, surprise moves, and some not or many of them not even producing the results that they were expected, really then at that point you have to look back and think, well, what are we looking at potentially? Just like we talked about the euro odd and the euro kiwi, they're going to hold here, but we'll probably see them start to come back in over the next couple of days. I don't think they're going to come in today, but you have to the moves are happening rather quickly. You have to look at the levels, but then you have to step back and say, okay, what's actually happening? And we all know that Mondays, they can have a tendency to run over people. Once again, surprise rate cut. Probably no one's going to jump in front of a train or anything like that right now, but they'll look. But what you're going to do is step back and look for the moves to, I wouldn't say necessarily exhaust themselves, but fatigue, but a little bit of fatigue at these upper levels, whether it be Euro New Zealand, Euro Kiwi, Euro odd, and take a look at that and see where they're at and say, okay, now let me go on and follow through the day as we get towards the end of the session for today and see where the vulnerabilities are, and then say, okay, what levels are there that we can see see it trip the market? It's not going to happen today in all likelihood, but you may start to see those moves start to wane starting tomorrow and into Wednesday, and then we may get the correction that we may have started to get from the close on Friday. Let's go and move into sterling yen. So the guppy cascaded lower as sterling faded across the board. The pair found a respite ahead of 31.17, which is 78% of this entire move. The pair will find sellers at 34.15. The pair would require consecutive closes above 36.02. That ain't going to happen. To market bottom, support is going to be 30.42. And that's where we're at. That's going to be the support, 30.42. Look, I mean, everything, there's so many things happening. Like I told you, obviously, don't want to sound like a broken record, but now Kuroda says that they're ready to double up on purchases on ETFs. So you have to think about it and sit back and say, wait a minute, let me sit back and see how this thing plays itself out, because eventually these moves will trigger further, whether it's to the downside or a bit of a correction. But once again, sterling already got knocked pretty good. But then again, here's the Bank of Japan with their actions, and then them saying they're going to keep buying and buying. They've already been buying already, and now they're saying, hey, we'll double up on ETFs. So you have to sit back. Once again, like I said, look at the moves, let them fully complete, if you want to, for lack of a better phrase, today. I wouldn't be doing anything today on some of these moves here, but I mean, I'm trading mainly the indexes, but I'm talking about some of the moves you're seeing here in currencies. Step back and say, okay, well, let me look at the levels. I mean, we've already fallen off a cliff. We came into the 78%. That probably would have been worthy of a bounce. Hence, we were talking about, they'll be selling at 34.15. But then, BOJ's to come in, obviously the BOE. So you say, okay, well, let's see what's going to happen. So let's see what, do we make another extended leg? But you're going to have to let that play itself out and maybe start to look at the latter part of Tuesday, see if we're seeing moves truly develop. So once again, support is going to be 30.42. And resistance, this is actually be the trigger of the close right there. There is resistance here. You can see this clearly, but this will be the trigger going forward for any further moves, which is going to be 32.56. I mean, this is a good case in point. You see how they hit the stops above the last 2 days highs, the stops well below the last 5 days, and then we finish up in the middle, which is going to be a long-legged doji. So generally, when you get a long-legged doji, bulls don't have control, bears don't have control. You finish in the middle, although we're not finished yet. And generally, what you'll see is the market pare back from what has been the most recent direction. So what's been the most recent direction? Well, that's pretty close to the upside. So once again, we're suspect for a pull down. Doesn't mean you step in now. I'd let today go and finish out, because if we do see a pullback, that will go and develop, and you can still come off quite a bit. So let the market tire itself out. We were already seeing this on Friday. You see, look at this strong move on Thursday. Then on Friday, we get a dark cloud cover. And then yesterday or into today, we test both sides. This probably means that the market is really starting to incur some fatigue. But in light of everything that happened and the Aussie potentially going weaker, then they pressed on both sides, because that's the direction the market's going to go with. No one's going to stand in the way. If you're looking for this market to pare back, something that's encouraging is they weren't even able to take the stops very high. So this market is susceptible. Look how they quickly dip. So I would let today complete and then look for, on a very short-term time frame, levels at where this market can break. And then probably start on Tuesday, you may be able to start to see some setups, and then potentially we can see this market work itself back towards 94.82. Well, look where we're at right now. That's a long way to go. So be patient. So on the upside, resistance is going to be right here, the close. 0148, which actually just 8 pips above where we were for Friday for our resistance. And on the downside, it's going to be right there, that close. Now, if you want to look at something very shorter time frame, we can do that, which is going to be here. You can see that that's clear as a bell. It's going to be 99.30 for trigger, maybe just a hair below it. See right there, that close right there? So call it 99.02. Okay, and that completes the bias chart. We'll just take a quick look at the S&Ps. We have rolled over into June. Now, if you remember, on Friday, this was that big area. I think it was Friday. We put in this key break. Now, on the June, it was 24.82. On the March, it was 24.82. On the June, it's 25.05. But you can see they can quickly blow through that. The key thing is we get a 2-hour close below this, you've broken this. But we were talking about, hey, if it gets above that, and we saw that, and that sparked this move back up in here. They came back and tested it, but you can see they never closed below it, and then they rallied. Well, chances are on today, we'll probably open even below that. And the key thing is if we close below 25.05 on a 25.06 on a 2-hour close, certainly opens the door for now us to give up all these gains. That would really open up a challenge down the way down to 23.50 if we were to see that. And potentially down here to 22.85. 2264. That would give you an area to point to. If we get that close, a 2-hour close below 2506 and invalidating it here, this move, which actually on daily, actually this supports 2525, but on a 2-hour close, that would allow actually open the door for us to challenge and take out the prior lows, because we'll have flipped this thing. This was key. You see, so if we break that and close on a 2-hour close below 2506, it opens the door for us now to challenge these lower lows. We would see what happens. So if we do break below that, that opens the door then to come down here 2264. And then we'd see what happened after that. That's all we have, though. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.